Hi guys, GK here. It is a beautiful Sunday in September. It feels like summertime. Many of you know me and many of you don't know me. If you don't know me, I am a top 25 money earner in the network marketing profession. I'm also a real estate investor thanks to network marketing. And I also am co-owner of Evolve Apparel, a new fitness clothing company that we launched in 2016. Today I want to talk about real estate. Many of you ask me all the time about real estate, how to get started. Now I'm going to tell you a couple things before we get started. One, I'm not an expert. Everything I've learned since 2013, 2012 is when I started to really dabble into knowledge, reading books and stuff like that. I'm not an attorney, I am not a lawyer, so this is not to give you any legal advice or any accounting advice. I'm just going to teach you what I was taught through the school of hard knocks, through just learning and falling and getting back up and being around people that actually have helped guide me too, which is important. Now, everybody has their own theory on real estate. Some of you out there want to buy, you want to flip, you want to hold, you want to wholesale. This video is not really about that. This video is more about how do you get started with an entity. Like, what should you do? You know, what's the first thing you should do? Should you have a sole proprietorship? Should you have an LLC? Should you have a corporation? So let's talk about those things. And I've actually written some notes down because this is so important to me to make sure that people have a sense of knowing what they're going to do. Because if they don't have a sense of what they're going to do, they usually never get started. So this video is in the hopes that some of you will see this and feel more confident on starting your game plan. So I even have some things written down here on my paper for me to make sure I don't forget anything. So the first thing it says is that anytime in business, if you start a business, let's say you have a business called Tom Miller's Hardware Supply or Mike Evans Painting, you're always by default a sole proprietorship, which means that you don't have to form an LLC. You can just be in business. And by default, state default, you'll be what's called a sole proprietorship. Anytime you go to get a credit card or anything like that, you'll see a little box that says sole proprietorship. So many of you do that. Now, let's talk about that in real estate. There's one bad thing about being a sole proprietorship in real estate, and that is there is no liability protection. So what does that mean, liability protection? That means that if you are a sole proprietorship and somebody falls and gets hurt, or one of your tenants decide they want to sue you, you can be sued and they can come after all your personal assets, which is a big problem, right? Now, for me, my first place ever that I ever bought that was a house that I was living in, and I ended up actually renting it out when the economy went bad. And I actually, guys, kept it for two reasons. One, I kept it in a sole proprietorship business because it was already a loan in my name, and there is a clause in most bank loans that many of you probably don't know, and it's called a breach of deed. And what that means is most banks do not allow you to change the deed from a sole proprietorship to an LLC. Now, people have done it, and I don't think the banks are going to come after you, and they probably won't sue you or try to break your mortgage. They probably don't even realize it, but there is in most loans a breach of deed clause in there. So number one. Number two, if you have it in a sole proprietorship, it's one of those things where, you know, if you're just starting out and you're broke. Guys, I was living in my mom's house. I was driving a 97 pickup truck. I didn't have the money for attorneys and accountants and LLCs and all these things. I didn't have anything they could take from me. Now, I'm not saying that's, you know, the reason to do it, but I'm just being honest with you. My first house was in my name, and I kept it as a sole proprietorship because I didn't have anything that people could take from me if they sued me, and I was broke. So I had to just start, and I started having a rental property with my own property. Now, here's the cool thing though. You can get what's called a liability insurance plan. You can get what I call an umbrella policy. So you can do business as a sole proprietor. You can keep it in there, which is great for many reasons. In some states, you don't have to pay what's called an excise tax when you have it as a sole proprietorship. Yes, in an LLC, many states will make you pay what's called an excise tax, where in a sole proprietorship, many states will not make you pay an excise tax. So if you want to keep it in a sole proprietorship, you can basically get what's called an umbrella policy, which is a $2 million, $3 million policy that covers you. If, let's say, somebody sues you, you're covered. Now, I have an umbrella policy. I actually have it on all my 16 rental properties, plus my 2 vehicles, myself, and my home, my personal home. So if anything happens and it exceeds the insurance that I already have on those policies, it still covers me up to $2 billion, okay? Now, those can be costly, though. Sometimes it's cheaper to have an LLC than have a liability insurance. So let's see what I have here. Just make sure I don't miss anything here. So I let you guys know by default, you're a sole proprietor. Even if you have a name, that's okay. You can have your own name of your business, but you're still by default sole proprietor, and there's no liability coverage for you, no liability protection. From a tax perspective, though, sole proprietorships in many states is better for tax reasons because you get to write all your expenses off in your Schedule C, which an accountant can explain to you what that is. I'm not an accountant. I just know that that's a benefit, being able to put everything in your Schedule C of all your expenses. It's less money coming out of your pocket. Again, no excise tax in many states. LLC has an excise tax in many states. Important is liability insurance. You can always keep it in there. A lot of guys have all their properties in the sole proprietorship, but they actually buy all their properties outright cash and basically have an umbrella policy. Other thing I learned, though, which a lot of people don't mention to you, is that I learned that many traditional banks, once you have 4 properties in your own name, they will not most likely let you cash out on the 5th. What does that mean? That means that if I own 4 properties on this block, all in my name, GK, now I go to buy a 5th one, I buy it, now all of a sudden I have all this equity in the 5th one, and I want to cash out, meaning I want to say, hey, I want to refinance this and take that cash out from the equity. Traditional banks will say, no, you can't do that. That's a rule they have. Also, after you get 10 houses in your name, most banks won't give you an 11th house. That's why most people that buy real estate cash might decide to do a sole proprietorship, because they're not getting loans from the banks. They don't care about 11, 12 houses, a bank giving them a loan. They don't care about being able to cash out because they're getting money from private lenders or doing things without the banks, okay? So that's sole proprietorship. Let's talk about, and also one thing, if you're doing a short sale, many states and many banks actually don't allow you to buy the short sale in an LLC. They want to see actual person's name on it. So you might need to do a sole proprietorship there. And other than that, that's pretty much, I think we covered everything for sole proprietorship. So my opinion, for me, real estate wise, I like LLC. I like LLC for many reasons. I like the liability protection, obviously. I like the fact that it's an actual entity. The bank sees it as a business with a tax ID number, and they actually give me unsecured lines of credit on the business side. And the interest rate is about 1/3 of what the interest rate would be on a sole proprietorship line of credit. That's one thing I like about it. What do I have here? It's the most popular. It's easy. It's flexible. It's easy to set up. My accountant doesn't charge me much. There's a state fee. But honestly, you can go online. You can download the forms yourself, send the state fee out, get your own tax ID. You can do all that. But what I've learned in life is pay the people who do it for a profession, pay them good, and make sure when it comes to legalities and stuff like that, you're covered. I am not an expert at these things. Yeah, I can go online and do it. I could probably go online and figure out how to fix this engine too if it blew up. But you know what? I'm not going to do that because I want to spend my time on things that I'm good at. So my advice is, find a good accountant, good lawyer who can help you out that's reasonably priced. If you need one, let me know. And form an LLC. Now, tax. You can be taxed, though. Here's the cool part. In an LLC, you can be taxed as a sole proprietor or an S-Corp. Now, sole proprietor, what do I have here? I have here, you can change it whenever you want. So if you're taxed as an S-Corp, here's the thing. The cool thing about being taxed as an S-Corp is when you start making a lot of money in real estate, it actually benefits you to be taxed as an S-Corporation. You'll do a lot better on taxes when you're making a lot of money. If you're not making a lot of money, it makes no sense to be taxed as an S-Corp. You can still just be taxed as a sole proprietor, which is good because you're going to pay less taxes as far as I believe you're not paying that opportunity tax, you're not paying that self-employment tax. I know that my taxes for me having real estate is less than if I had a traditional business because it's passive income. And the tax on the passive income is less. So the cool thing is right now I have LLCs. I am being taxed as basically as a sole proprietor, which is great. I'm getting the benefits of that. But if I make a lot more money in the future, which I plan to, I probably will be taxed as an S-Corp. I'll probably change that around. Now let's see here. Self-employment tax. Yep, that's the one thing that you don't got to be paying as a sole proprietor. You are paying self-employment tax. Sorry about that, guys, but you're not being taxed as high because it's passive income. And I think I said that correctly. So S-Corp here, again, for lots of money. Now, you're never going to probably form a corporation for real estate due to the fact that, most corporations, you need 5 employees to even open it up. And it's a big business, and it's taxed very high. It's taxed differently. And you'll probably do an S-Corp if you're going to do any kind of corporation. So I personally don't have any S-Corps right now. Like I said, if I could be taxed as an S-Corp, why not do an LLC? It's so easy to set up. The paperwork is easy, it's simple, it's flexible, not a lot of data and stuff like that. So we talked about sole proprietorship, we talked about LLCs, we talked about S-Corps. Let me make sure I didn't confuse you guys with anything here. Sole proprietor, self-employment tax, once you make money, can be expensive. So yes, that's what I was trying to say before. I'm confusing myself there. So if you are if I start to make a lot of money, I am paying a self-employment tax, and that can get costly. That's where the S-Corp is not as costly, but the benefit of real estate is you're not paying as high of a tax because it's passive income. So there's a lot to understand. I mean, it's sometimes confusing for me. I have a lot of notes that I've written down over the years. If I ever get confused or I forget, because I'm not always dealing with this part of the business, my accountant takes care of that. I just call my accountant and we go over it again. Now, a couple of the things I want to talk about here is active and passive income that we talked about. So active income in real estate is something that I don't do. That's when people buy houses, they sell houses, they flip houses, or wholesaling. Guys, I am more of a passive income guy. I hold and I lease my properties. Now, I've thought about doing a flip. I thought about maybe even doing a flip, but holding that flip, meaning once I flip it, hold it. So here's what happens, and here's a very important thing I didn't know that I was taught. If you have an LLC or an S-Corp and you have your passive income properties in that LLC or S-Corp, and now you stick in a flip or a wholesale deal and you start mixing passive and active income, many states, the IRS can say to you, and it can happen where they'll go, hey, you know what? We're going to now tax you completely on active income. And that can be very costly because now they're going to see that LLC, that the LLC is making passive and active income. And all that rental cash flow is now going to be taxed at a active level. It's kind of like, capital gains tax. So be careful there. That's why I have a third LLC, just in case I do a flip or a wholesale, or I do something that's not going to be passive income. I'm going to buy that property and I'm going to put it into that LLC. I don't want to be taxed on all my rental income because of one active income that I mixed in there. So just keep that in mind, guys. What else do I have here for you today? Let's see here. Don't mix active passive income, rental passive income, same. Yeah, it could basically say that all your income can be taxed as ordinary income. So we just went over that. Now, where to set it up? Here's a quick question. People say, well, should I set it up in a different state? I know Wyoming right now is really popular because of non-disclosure statements and different kind of rules you can have by putting so I can basically set up my LLC in Wyoming or Arizona. I recommend doing it in your own state. I think it's just a lot less of a headache, a lot less paperwork, a lot less stuff going on. I think that let's say I want to buy a house in Pennsylvania, but I own an LLC or S-Corp in Wyoming, sometimes somebody might look me up, or the bank might look it up and say, well, wait a minute, you don't even have your LLC in the state that you want to buy in. We need all kinds of statements now and all kinds of paperwork, and it could be a headache. I like to buy it where I'm at, so I recommend buying forming the LLC where you live. I know a lot of people try to avoid certain things with taxes and this and that. That's not the kind of game I like to play. I can't do that. That's just not me. But hey, if you want to do that, you can. So that's one thing. And people say to me all the time about how many entities should they have. So what I have here is basically I put my real estate properties, believe it or not, with different counties. Should you buy a property and have an LLC for each single house? I don't do that. Honestly, I don't do that. I mean, you can do that. If you have that kind of money to spend every year, the fees for every LLC, all the paperwork, it can get costly. I mean, we're in this business to try to make money. It can get costly. I mean, I think you'll know, like for me, right now I have like 5 properties in one LLC. I have like 8 in another. I think that you kind of figure out, maybe it's time to open another one, start a new one, put more properties in there. That's really personal preference. I like to keep it simple. I like to keep it cheap. There is something called, I believe I wrote it down here, it's called a land trust. A land trust is a little bit more complex. I'm not too familiar with them, but I know that you can get a land trust, and I know you can put all the LLCs in that land trust. And now when somebody looks you up to see how many properties you own, they can't even really see what's going on because a land trust owns all these different LLCs under it. So many different things you can do, but what's the moral of the story today is what should you do? My opinion is form an LLC. Simple, very cheap to start, liability protection. Even with my LLCs, I still have an umbrella policy just to be covered extra, because you just never know. You make a lot of money and you do well in life, something can happen and somebody can come after you and you just want to be covered. It's worth it. So liability is really the main focus of having real estate, is making sure you're covered there. Guys, I hope this helps. I hope I didn't forget anything. I'm going to try to think here if I forgot anything. But basically the bottom line is, if you're starting out and you can't afford an LLC, you could always start as a sole proprietor. Just make sure you get a liability insurance plan, an umbrella policy. There's different kinds. Mine allows me to have up to 26 or 29 rentals on 2 vehicles and my own personal home, I believe. So guys, good luck. This is the first step, understanding the legalities of it and understanding which way to go. Like I said, I have 16 properties. I've purchased them all since 2012, except for one. The first one I had was the one that I told you years ago. 2 of them are in a sole proprietorship. The other 14 are in 2 different LLCs. I have a third LLC for active income. If I want to do active income, it's already set up. Operating agreement, all that's done. If I need to go and take care of something with that, it's already set up for me. I don't have to, pause and then be slowed down. It's ready for the future. If I want to do something, I had it ready. Every year, I think I pay a $100 fee because I don't actively use that LLC. So there is a fee. So imagine having 30 properties with 30 LLCs. You're paying $100 at least for each one of those LLCs just to file. Every state could be different. Guys, let's make something happen this year. It's 2016. I'm about to look at my 17th and 18th property. I'm trying to get to 20. I can't believe it. I started with 1. My goal was to hit 20. I'm so close. Now I'm thinking maybe 30. 30 is the sweet spot. I think 30, and that depends, but for me, the numbers make sense that at 30, I'm making a 6-figure net passive income, even with the mortgages on them. Now, without mortgages, and 15 years from now, I'm going to be the sweet spot. 20 properties would be amazing. But if I can get to 30, even with mortgages on them, I'm going to be making 6 figures in net income. And where else can you do that? By just collecting rent and being a landlord. It's pretty amazing. I mean, it is pretty amazing. You get to basically put down, and if you're dealing with banks, you put down 20% of income. The bank gives you 80%. You're getting 100% cash flow, but you only put in 20%. You have an instant partner with the bank, right away, boom. You have tax breaks, depreciation, equity, appreciation. There's so many things. I mean, where else can you put 20% down and get 80% from somebody else and make 100% cash flow? You can't do it with tax. I mean, with the stock market, you can't put 20% down. The stock market gives you 80. That's why I love real estate. It's awesome. And then in a couple of years, you have your investment back, and really it's the bank's money that's in the game. Now, if you're doing private lending and things like that, totally different ball game. There's so many ways to do it. I normally either use lines of credit. I pay the lines of credit back. I use banks. Right now I have private investing, which let's say, I'll give you an example of private investing. I find a home. It's pretty much beat up really bad. They're asking $30,000, right? Sheriff sale, bank owned. I buy that property with an investor's money. He's charging me, let's say 8, 10, 12% interest a month. He might be using it from a self-directed IRA. Now he's on my promissory note. He's on my lien. He has his name on my insurance policy. So I buy this beat up property for 30. I fix it for, let's say, 40. So I borrowed 70 from this guy, right? Or this woman. It could be a guy or a woman, right? Let's not assume it's always a guy that has money, because it could be both. And let's say it takes me 6 months to get it ready. I get a tenant in it. I want to keep it though, right? So now I go to the bank, and depending on the bank, a lot of banks will do a mortgage for you in 6 months or a year. My bank will do it in a month, but they only give me 70% loan to value, or what I paid. So you wait a little bit for it to be seasoned. You're paying the interest every month. Well, now you go to the bank and say, hey, I have this house. I want to get it appraised. I want to put a mortgage on it. I have a tenant in it. And the bank says, oh, you know what? That house is worth $120,000. And you're like, wow. Obviously, I knew it was going to be worth $120,000 before I bought it. And I knew that once I fixed it, the value would be that great. So now I get a loan. Let's say my bank gives me 80% loan to value or 70% loan to value. Well, here's the great part about it. I pay back the investor his 70. The interest for the year, let's say, was probably about $6,000 to $8,000 that I took out of my own pocket, or maybe I used that line of credit from a bank or a credit card, right? So maybe it wasn't out of my own pocket, but it's money that I owe. Now I pay him back his 70K, and if to do the numbers right and get the right deal, I can pay back myself the interest that I paid him too. That goes back and that pays it off. I just got a property for free. So that's where I'm at now. I mean, eventually, 20% down of your own money, you're going to run out of money. But if you can find a private investor who's willing to do that, and if I don't pay him, guess what? He just gave me 70, but now he owns a $120,000 property with a tenant in it. So he's winning no matter what. He's winning with his interest because his IRA is not making him 8 to 10% or 12%, and he's winning if he gets to keep my property. I noticed that on some of the listings on the MLS, some people say they're willing to hold the note. Owner financing available. That's a great way for somebody who doesn't have great credit and doesn't have great tax returns to be able to say, hey, you know what? I'm willing to buy this house from you. Would you do owner financing from me? I'll give you 10 grand down or 5 grand down. And now the owner of that house and would basically be your bank. If you basically forfeit on paying him, he keeps your down money and he has his house back. So if you're wondering how you can get in real estate and you don't have good credit or you don't have the tax returns, there's people out there who are willing to hold the notes for you. Just look at the bottom of the MLS. It tells you like conventional lending, FHA, owner financing available. So if you really want to get in real estate and you really want it bad enough, read some books, listen to people who've already done it. Okay, don't listen to people who talk about being a business owner. Listen to those who's already done it, and just go out there and search. And listen to somebody that you think you can relate with. I'm not an expert. This is what I've done in 3 years. It's not always easy, but it's so worth it, guys. Have a great day. I hope this helps. So much more I want to talk to you about, but we'll do a second episode if you guys like the first one. Take care.